Portfolio Builder members, today is June 3rd. I'd like to take a quick look at our profit loss from Friday till today through the new trade alert. So Friday we had sold the 276 covered call at $1.87 when the trading price was $276.48. So that gave us protection to just below 275. And the reason we like the 275 strike is because there's a huge open interest order of about $1 billion sitting at 275 on Friday. So that gave us the confidence to sell the 276, knowing that we're protected to just below that strike. And we were sitting on a profit of $32,067. After covering yesterday's trade, we've jumped up to a profit of $32,883, so about a profit of $800 from Friday until today. And the trade alert is to buy to close the June 3rd 276, right as it's trading at 276.24. And so we're collected $1.80 approximately, buying it back for 91 cents. So we made a 50% profit on the covered call and continue on. So now we are selling to open. My bad, I had the wrong side on there, but sell to open the June 5th 277 call option. When we wrote this, the SPY is trading at 276.33, and so if we subtract the $1.44 credit, you can see we're protected back to that 275 level. What's so important about the 275 level? Wall Street is willing to buy now $1.3 billion worth of the SPY ETF at 275. So 50,000 shares times or contracts times 100 shares per contract times 275 purchase price on the SPY. That's $1.3 billion ready to buy the SPY right now at 275. And it continues to be the open interest that is building up in the option market. On the other side, the call option market is flowing into the 277, and so without some crazy news, I'm not sure what else could be announced between now and Wednesday. Of course, more rhetoric between US China, but we're protected to this 275 level. So that's the trade alert. Once we input the new trade in for $1.44, you can see that we're agreeing to sell our shares for $2.77, and if we did do that, we'd also get to keep the $1.44. So the only way that would happen is if between now and Wednesday the SPY would have to go at least $1.44 above $2.77. So it'd have to go to $2.7844 for the person who's bought this call option from us to start making money. And so we would love for him to cash out a double or a triple or whatever it is if the market were to fly higher, because we're protected to the critical level and generate a profit if the market goes up, flat, or down. So that's a much better situation to be in and why we like it. So depending on what we buy this back for on Wednesday, our profit has continued to grow and be able to reduce any volatility. Now, the last part of the trade that we do recommend is for every 100 shares of the SPY you own, to own the long put option, which is the July 19 264 put. There is a big period where we were recommending this alert and it was trading at $1.60. It's now up to 313, or actually up to 330. Here is today's price. It did go up about 20 cents from Friday through today, and that's okay. So I don't like to buy call options when volatility is high, because if the market goes up, volatility goes down and the relative value of the option market decreases. So it makes it hard to generate a profit buying call options during times of high volatility. Better off to do that when volatility is low. Now, in the put option world, if the sky falls and Armageddon begins, well, volatility will spike. So I don't mind paying a premium for put options because it's our insurance policy. So we're playing the short-term game with the covered call, looking at where the support is from Wall Street to choose our strikes. And when we're seeing a volatility spike and then a calming down, you can see I'm getting a little more aggressive. So today's trade can generate a very large profit relative to some of the previous trades we've done. But in terms of protecting from a huge drop, we need this put option. So if this did go below 264, this would quickly trade well above 10 and probably push up towards 20 if we went several strikes below 264. So it's great insurance, it's cheap, and pretty soon we will actually extend this date, cover any position we have on it for a profit, and then push out to August. So that's where we're looking at in today's trade alert. Now I do watch the market till close, and if we see the SPY get below 275, I'll most likely issue an emergency alert towards the end of today before the market closes. Now you can trade the SPY for at least 15 minutes after the market closes. Some brokerages will let you trade it all night in the after hours market, but so what happens if we push towards 275? We'll buy back this covered call for a big profit. So we're collecting $1.44. It'll be worth maybe 44 cents if we get to 275. So we can take a profit on that and then write a new one at a lower strike. So that's our play if we get anywhere near losing money. So you can see how easy it is to protect your nest egg, generate profits, and basically be the bank. We're the bank. We're loaning out shares of the SPY to speculators. Most of the time they lose. If they win, we don't lose. The only time we can lose is if the SPY goes down below our strike plus the credit we're receiving. And even when it does, it's not a big deal because we sell our covered call for a huge profit and write a new one to extend our protection. So I think you'll see the longer you follow this program that our main goal is to just simply not lose money. And then when the market's nice and either flat or goes up, we just bring in profits. And a lot of the times we can make money when the market's going down as well. So it makes for a very slow but profitable strategy. And if you hate losing money, but you like to make small amounts of profit over and over and over again, that's who really digs this program. If you're on a free trial or an expired trial, I encourage you to call Dean 505-322-7515. He can save you $100 off the basic membership, and he'll tell you about our Diamond membership and Whale membership. You're going to get 30 days free access to that program, to both of those programs, when you upgrade to the basic. So you'll see what the difference is. Also, this afternoon, if there is no emergency alert, which 99% of the time there is not, I will shoot a video right at the close and review all three portfolios, all the important news I've collected. There's a lot. I've been collecting news since through the weekend, so Monday's update has a lot of content. And we'll review all our plans, our three strategies, the cryptocurrency market, a lot of charts that are outside of our stocks that we use as leading indicators, and a whole bunch of content. So protect your portfolio. Call Dean 505-322-7515. Next trade alert for this product is due Wednesday, but if there is any reason to buy back our covered call for a profit and write a new one lower, you'll get a text message and an email either at noon Eastern, Monday through Friday, or before the close. So I'm watching these prices like a hawk. Our main goal is, again, to protect our assets and be very, very difficult for us to ever lose a penny. I'm pretty upset when we lose $60. So that's the name of the game. Protect the capital, generate the safe, consistent profits, and we can do this for a long time, for the rest of your lifetime and for the rest of your children's lifetime. Before you know it, there won't be 3 option expirations a week. There'll be daily. So thanks again, and look for a new update this afternoon right after the market closes.